Ford spent the entire day under pressure after slashing prices on its F-150 Lightning. But the issue runs deeper than just discounts. Ford isn't just in trouble, it's in serious danger. The kind of danger that doesn't just tarnish a brand, but threatens to crush it completely. Not long ago, Ford was flying high. During Trump's second term, it was hailed as the backbone of American manufacturing. Media outlets praised its revival. Dealerships were packed. Ford trucks were supposedly flying off the lots. But that picture, it was a mirage. Behind the scenes, something was going terribly wrong. Truck inventories ballooned. Loyal customers walked away disillusioned. Dealers pleaded with Ford to stop sending more stock. But instead of pulling back, Ford doubled down. Keep pushing, keep selling. Meanwhile, across the border, Canadian Prime Minister Mark Carney championed an electric transition. Ford's continued dependence on gas-powered vehicles was starting to look dangerously outdated. So how did this comeback story turn into a full-blown disaster? And can Ford recover, or is this the end of an era? Reality check on the lots in the US, Ford trucks had long symbolized power and reliability. But a harsh new reality set in. Drone footage captured massive grassy fields in the Midwest, packed with unsold F-150s. One Texas dealership even resorted to storing trucks in a retired baseball stadium. In Vermont, a small dealer struggled to cover floor plan interest payments as sales dried up. The numbers were alarming. Days to turn inventory hit its highest level since 2009. What started in rural areas quickly spread to urban showrooms. 6 months later, once busy dealerships echoed with silence. In a tense call with regional managers, one Ohio dealer practically begged, "We don't have room. We don't have buyers. Please, stop sending us trucks." Ford's answer, a cold no. Production targets had to be met. No exceptions. What once represented hard work and dependability now sat idle, collecting dust and weeds. Rumors swirled that Ford executives were ignoring dealer feedback just to maintain shareholder appearances. But as more trucks piled up and fewer left the lots, it became clear this was spiraling out of control. The price hike misstep. Then came a baffling move. Ford raised prices on its 2025 models. Internally, the finance team cited inflation and Trump's renewed tariffs on Chinese batteries. It was spun as a necessary correction to protect margins. But buyers saw it differently. After years of waiting during pandemic delays, they felt betrayed. One Ohio family who'd waited 3 years for a Bronco Outer Banks model walked away after a $6,000 price bump just weeks before delivery. Ford's marketing framed the increase as a value realignment. But outside the corporate bubble, customers were furious. Social media erupted with backlash. Dealership phones rang non-stop with complaints. Wall Street reacted swiftly. Analysts downgraded the stock and warned of a shrinking market share. In trying to protect margins, Ford may have pushed away its most loyal customers. Dealer rebellion erupts. The backlash didn't stop with customers. Dealers, Ford's most crucial partners, felt betrayed. Emergency meetings were held across the country. Frustration turned to open defiance. A group of Midwest dealers drafted a scathing open letter accusing Ford of sabotaging its own network. Desperate to move inventory, some dealers quietly offered under-the-table discounts, violating franchise rules. Ford responded with legal threats and warnings of revoked licenses. Meanwhile, Trump's Justice Department hinted at possible tax investigations related to unsold inventory. Outside showrooms, reps from Subaru and Chevrolet handed out flyers and coffee, encouraging Ford customers to jump ship. The breaking point? A viral TikTok showing a dealer spray painting "No More Broncos" on a showroom banner. It was a stunning act of rebellion, and it resonated. The Broncos fall from grace. The Broncos' return in 2021 was hailed as a rebirth of American grit. Demand soared. Dealers couldn't keep up. Buyers paid well over sticker. It was a triumph, until it wasn't. As production ramped up, hype turned to oversupply. The Broncos' once exclusive image vanished. Prices fell. A Colorado buyer who paid $65,000 for a Badlands edition watched the same model go for under $48,000 just 3 years later. Jeep, Ford's longtime rival, kept its strategy simple and steady. Wranglers held their value. The Bronco? It became just another SUV. Internal Ford emails showed execs debating whether to pause Bronco production. But there was no consensus, halt to save face, or push forward and risk further damage. From king to castaway, the F-150's decline. For over 4 decades, the F-150 was America's top-selling vehicle, an icon of grit and reliability. But that legacy is now in jeopardy. Suddenly, high-end trims like the Lariat were being discounted by $10,000. The once premium XLT was now under $50,000. To loyal buyers, the discounts didn't spell value, they screamed desperation. With diesel prices rising due to Trump-era tariffs and maintenance costs climbing, even farmers in Iowa began exploring alternatives like Ram and Silverado. One Kansas dealership hosted a weekend-long Save the F-150 event. Turnout was dismal. Internal logistics reports warned that overflow lots would hit capacity by Independence Day. The F-150, once a symbol of strength, had become a symbol of corporate miscalculation. Lightning strikes. Out. The F-150. Lightning was supposed to be Ford's breakthrough, an electric revolution for its most iconic model. Early buzz was strong, social media was flooded with praise. But when real users got behind the wheel, problems emerged fast. Towing a trailer. Range dropped below 100 miles. In rural areas, the Lightning proved impractical. And the base model that launched at under $40,000. It ballooned to nearly $60,000 in just 18 months. Ford's internal data showed each Lightning was losing the company $40,000 per unit, even with subsidies. Assembly lines slowed to a crawl. Once high demand vanished. The Lightning became a cautionary tale in blending tradition with tech, and failing. The loyalty exodus. Perhaps the most painful blow was the erosion of customer loyalty. Families who had driven Fords for generations began switching to Toyota and Chevrolet. Tesla's Cybertruck lured away younger buyers with flashy tech and free supercharging offers. One Vietnam veteran who'd driven F-150s for 30 years summed it up best: "It just doesn't feel like my truck anymore." They forgot what made it special. Even Ford's Net Promoter Score, a key measure of customer satisfaction, plummeted to record lows. The company wasn't just losing sales, it was losing identity. Financial freefall. When Ford's earnings call finally arrived, the numbers were worse than expected. CEO Jim Farley tried to put a positive spin on things, but the facts were brutal. $3 billion loss for the quarter, $1.2 billion lost from the EV division alone, $37,500 lost per electric vehicle sold. Social media lit up. Even President Trump weighed in, tweeting simply, "Sad, American icon crumbling under bad management." Moody's put Ford on credit watch. Borrowing costs soared. Institutional investors started dumping shares. Whispers of bankruptcy grew louder across forums and headlines.